Imagine opening your banking app one morning. Your balance is there. The number hasn't changed, but the buttons don't work. No transfers, no withdrawals, no explanation. Just a calm message. Your account is temporarily restricted. That's the moment most people realize something unsettling. Your money didn't disappear, but it also isn't yours in the way you thought. And here's the uncomfortable truth. Banks can legally freeze your money without stealing it, without breaking the law, sometimes without even warning you first. This isn't a rare loophole. It's baked into the system. And right now, it matters more than most people realize. Because freezes aren't just happening to criminals or fraudsters. They happen to regular people, small business owners, travelers, freelancers, anyone who moves money in ways software finds unusual. So let's slow this down and walk through how this actually works. Not the scary version, the real one. When you deposit money into a bank, it feels like storage, like a digital locker with your name on it. But legally, that's not what it is. The moment your money enters the bank, ownership changes. You don't store money there. You lend it. Your balance is a promise, a claim, an IOU from the bank saying, we owe you this amount. That's why banks can use your deposits to issue loans, buy assets, and earn interest. Your money becomes fuel. Most of the time, this system works beautifully. You swipe, you transfer, you withdraw. No friction, no drama, until something triggers a pause, and that pause is called a freeze. Now here's where it gets interesting. Banks don't freeze accounts because they feel like it. They freeze them because they are legally required to. Over the last few decades, governments added layers of rules meant to stop crime. Money laundering, terror financing, tax evasion. On paper, it sounds reasonable. In practice, it means banks are forced to behave like quiet investigators. Every transaction you make is scored by algorithms, not judged morally, judged statistically. Is this amount unusual for you? Is this destination new? Is this timing strange? Is this pattern similar to past flagged cases? No human intent required, just probability. If the score crosses a line, the system doesn't ask questions. It locks first. Think of it like airport security. If a scanner flags your bag, you don't argue your way through. You wait while someone checks. But here's the key difference. At the airport, you still have your wallet. With a bank freeze, your entire financial life is inside the bag. Rent, bills, food, payroll, all paused. And legally, banks are often not allowed to tell you exactly why. That sounds absurd, but it's intentional. If banks explained the trigger, it would help criminals reverse engineer the system. So silence becomes policy. From your side, it feels like punishment. From the system's side, it's risk management. Now let's talk about timing, because this is where stress turns into panic. Most freezes are not instant to resolve. They take days, sometimes weeks, not because your case is complex, but because compliance departments are slow, understaffed, and cautious. Every decision is documented. Every release is reviewed. No one wants to be the person who approved the wrong transaction. So your money sits still, perfectly safe, completely unusable. Here's the irony. Your money is considered safe enough for the bank to keep using, but not safe enough for you to touch. That's the part no one explains. Why does the system tolerate this? Because modern finance runs on confidence, not cash. Banks need deposits to stay put. They need money flowing, not being withdrawn all at once. Freezes buy time. Time to verify. Time to stabilize. Time to prevent panic from spreading. In extreme cases, freezes aren't about you at all. They're about protecting the system from itself. We've seen this before. During crises, bank runs, liquidity shocks. When too many people try to move money at the same time, the system cracks. Freezes slow the motion, quietly, legally, effectively. This is why the terms you never read matter. Those long agreements say the bank can restrict access if they believe there's risk, not proven risk. Perceived risk. That's a low bar, and it's getting lower as systems become more automated. The hype says digital banking gives you total control, instant access, freedom. The reality is more conditional. Access depends on trust. Trust depends on patterns. Patterns are judged by machines. Most of the time, you'll never notice until the day you do. So here's the question worth sitting with. If your money only works when nothing unusual happens, if access can disappear without explanation, if ownership is really just a promise, what does financial security actually mean anymore? And how much of it is just confidence, quietly waiting not to be tested?